What are your thoughts about Tesla stock? Tesla stock is one of the most watched stocks in the market today. Several analysts keep their eyes on the leading EV company throughout the year. That said, Wedbush analyst Dan Ives said that Tesla stock has bottomed already. Don't miss this info. Tesla clearly is starting to see demand cracks in China and in the US at a time that EV competition is increasing across the board, said Dan Ives, a tech analyst with Wedbush Securities and a Tesla bull who cut his price target for the stock in late December from $250 to $175. The price cut that Tesla enacted was the straw that broke the camel's back on the stock. Daniel Ives, known simply as Dan Ives, is a managing director and senior equity research analyst covering the technology sector at Wedbush Securities since 2018. Dan has been a tech analyst on Wall Street for over 2 decades, covering the software and broader technology sector. He is a globally known technology equity research analyst and managing director with FBR Capital Markets for 16 years, focusing on the enterprise software hardware sectors, including cybersecurity, cloud computing, big data technology, and the mobile landscape. A major area of his research focus is electric vehicles and disruptive technology over the next decade. This explains his religious study of Tesla and its stock. In early November, Tesla stock was removed from Wedbush's Best Ideas list over Tesla CEO Elon Musk's Twitter debacle. Experts believe that Twitter has become an albatross for Tesla stock, and so Wall Street is reacting to the cross-contamination between social media and the automotive brand. That said, Wedbush analyst Dan Ives removed Tesla stock from his Best Ideas list and cut his price target to $250 from $300, although he still rates the shares at buy. Note that this was in November, and Ives has since cut down his Tesla price target to $175 in December. At the time, a popular misconception about Elon Musk and Tesla emerged. Musk's Twitter venture is the main reason Tesla shares have lost so much value this year. Although Musk may have been giving signs that he may give up his CEO title at Twitter, investors became concerned that the outlook for Tesla's sales and profit is taking a turn for the worse. In light of this, Tesla has announced a rare sale, which some see as a sign of weakening demand. The company offered 2 rebates for buyers who take delivery of a vehicle before the end of 2022. Initially offering a $3,750 discount in early December, Tesla then doubled that rebate to $7,500 in late December. To this, Wedbush analyst Dan Ives shared that Tesla is starting to see demand cracks in China and the US, at a time that EV competition is increasing across the board. He added that the price cuts that Tesla enacted were the straw that broke the camel's back on the stock. Experts believe another reason why Tesla's stock is sinking is that the US economy could tip into recession this year, hurting car sales. Musk previously said on a Twitter Spaces call that he foresees the economy will be in a serious recession in 2023. "I think there's going to be some macro drama that's higher than people currently think," he said, according to Reuters, adding that homes and cars will get disproportionately impacted by economic conditions. In early January, Ives said that Tesla's Cinderella ride is over and demand is starting to crack. Although Tesla delivered more cars than ever in 2022, it still wasn't enough to meet its own lofty forecasts. Still, Tesla watcher and Twitter CEO Elon Musk critic Dan Ives is sounding a bit more optimistic about Tesla stock after a major hammering to kick off 2023. With $5+ of earnings power still hittable and the stock in freefall, we do not believe now is the time to bail on the stock, the Wedbush managing director stated in a new client note on Wednesday, adding that the stock is way oversold on fears of the unknown are around the corner. Ives has been highly critical of Musk's chaotic leadership at Twitter and off in front of the fierce sell-off in Tesla that began in the latter months of 2022, removing the stock from his Best Ideas list in November, as was earlier mentioned. Since that call, Tesla's stock has crashed by about 43%. The major worry now overhead for Tesla is that the demand story, especially out of China, is showing heavy cracks in the armor, at a time that EV competition is steadily increasing domestically, with NIO, BYD, XPeng, and others fighting for a smaller pie with the Chinese consumer weakening, Ives wrote. With China representing 40% plus of the global growth story for Tesla, this is a heavy concern for the street, which will likely result in more significant price cuts over the coming months to spur demand, as a potential pricing war takes place to gain market share in a darker macro backdrop. JP Morgan analyst Ryan Brinkman appears to share Ives' view, as he notably cut his profit estimates and price target on Tesla in the wake of the Q4 delivery and production numbers being reported. Part of the problem with Tesla's stock price is that critics question whether it was ever worth the trillion-dollar valuation it had at the start of 2022. At its peak, Tesla was worth more than the 12 largest automakers on the planet combined, despite having a fraction of the sales of any of them. Today, it is worth around $399 billion. It got ahead of itself in the near term, said Gene Munster of Loop Ventures, another Tesla fan. I still believe this can be a much bigger company. I think it will see those kinds of numbers again, but it could take a long time to get there. Tesla's growth prospects, a target of 50% sales growth annually, as Tesla CEO Elon Musk shared in a previous earnings call, helped drive that valuation. It conceded in October that it will miss that sales target for this year. The stock's significant climb, rising 743% in 2020 alone, was driven by Musk's reputation as a genius who would disrupt the massive global auto industry. Tesla was viewed as a disruptive technology company, not as an automaker, and a large part of that premium is related to Musk, said Ives. Tesla critics, on the other hand, said much of its sky-high valuation was based on promises that Musk made about future products, many of which came years after they were originally promised. A good example is the Cybertruck, the Tesla pickup truck, first unveiled 3 years ago with promises that production would start in 2021. Now production is slated to start this year, with a ramp-up in production in 2024, putting it years behind other electric pickup offerings from Ford and upstart EV maker Rivian, both of which have electric pickups available for purchase today. It could also trail planned electric pickup offerings from General Motors. Elon Musk has a pathological problem with the truth, said Gordon Johnson, one of the largest critics of Tesla among analysts. When people say he's a genius and innovator, it's based on all his promises he never lives up to. Johnson said Tesla shares will have a much steeper fall ahead, once it starts being priced like other automakers rather than on its promises. He said that for Tesla to hit its growth targets, it needs to be building new plants almost every year, but that new factories in Germany and Texas that opened in spring are still not operating at full capacity. And he said that its plant in China has had to scale back production due to weak sales in the market in the face of the COVID restrictions. Demand in the US has collapsed, he said. 2 months ago, your wait time was 2 or 3 months. Now you can get one immediately. They're going to build more cars than they sell for a third straight quarter. It's the definition of excess capacity. Tesla is still by far the largest EV maker worldwide, although that title is being challenged in some key markets by Volkswagen in Europe and BYD in China, and more competition is coming from established automakers such as Ford and GM. Musk's seemingly chaotic Twitter venture didn't help make matters any better. Tesla shares have lost over 65% of their value since Musk's interest in Twitter was first disclosed in April, with a nearly 50% decline since he closed on the deal in late October. Investors have been disappointed that Musk appears to be paying for so much of his $44 billion purchase of Twitter by selling Tesla stock. Musk, Tesla's largest shareholder, has sold $23 billion worth of Tesla shares since his interest in Twitter became public in April. On a Twitter Spaces call in December, Musk promised he was done selling shares of Tesla stock until at least 2024, if not beyond. However, he hasn't lived up to a previous promise in April that he was done selling Tesla shares, selling $14.4 billion of that stock since that time. It's been a Pinocchio situation for Musk, saying he's done selling stock. Investors want to see him walk the walk and not just talk the talk, said Ives. Still, Dan Ives says Tesla's worst year on record shouldn't be viewed as the end of the story, but rather a painful interim speed bump. Subscribe to Tesla stock for more.